we're here to stay. Streams start to rise and some may fall, but with NASDAQ's guidance, we can conquer all. Dynamic moves ahead in this financial hall. Join us on this journey, let's answer the call. Streams starting soon, just a moment away. Bull and bear in motion in the NASDAQ ballet. Own your future now, let the market sway. With NASDAQ's rhythm, we're here to stay. So sit back, relax, the stream's about to start. With NASDAQ's melody, we'll capture your heart. Own your future now, let the market sway. With NASDAQ's rhythm, we're here to stay. Welcome to the market, where the bulls and bears play. Watch the numbers dance as we start a brand new day. With NASDAQ's colors bright and futures in our sight, we're here to own the future. Everything's alright. Stream starting soon, just a moment away. Bull and bear in motion in a NASDAQ ballet. Own your future now, let the market sway. With NASDAQ's rhythm, we're here to stay. Tickers on the rise, and some may fall, but with NASDAQ guides, we can conquer all. Dynamic moves ahead in this financial hall. Join us on this journey, let's answer the call. Stream starting soon, just a moment away. Bull and bear in motion in a NASDAQ ballet. Own your future now, let the market sway. With NASDAQ's rhythm, we're here to stay. Relax, the stream's about to start. With NASDAQ's melody, we'll capture your heart. Ooh, yeah.
He was busy while we were gone. What did I do? I just went for a walk. You! Look at that thumbnail that you got.
Oh, I reused it.
You have like a little team of graphic artists in your garage.
What am I doing? Music. Me, music, them people. I don't want to listen to them right now. Bama?
Why?
How's it going?
We all get hungry. Well, yeah, we all get hungry, but you don't want to see a guy stuffing his face.
Like that one guy is?
Yeah, I think it's rude and crude. I don't know what to do.
He was getting mad at me one day. I was talking to him on Discord by myself. I was eating a cookie. He's like, "You're eating in front,
like,
you're eating in front of people?" Like,
at least I'm consistent, right?
I worry about eating in front of people.
We're like the Odd Couple. Do you remember the show The Odd Couple?
I don't know.
Did you ever see it?
No, I don't think so.
No. Well, no, they weren't a couple. They were just two guys.
What do you do when you go to a restaurant and everybody's eating?
Yeah, the name of the show was The Odd Couple. They weren't a couple. It was just two friends.
I got work to do.
No, because the way you were shaking your head, they weren't a couple. They were just two friends, but they were so different. So the name of the show was The Odd Couple. Maybe forcing a fart is rude. I don't know. I think among guys, I think farting is fun.
Yeah, you talk about me eating a cookie in front of you. You're eating in front of a stream.
Yeah, I have no choice. Can't let a pizza go to waste.
Oh man, I agree with that. I give you that.
That's a cardinal rule.
All right, gotta set up my accounts. I'm just here for the YOLO.
If you guys hear me chewing and swallowing, let me know.
Bam, I was thinking about YOLO.
Yellow?
Yeah. Let's see. Let's put what we're doing. NQ. I cringe even putting NQ on my charts.
Do I want to trade anything? I don't want to touch my Bulenox accounts. Oh, I have Bulenox evals. I have the day trader eval too, which is ahead 100 and something. So maybe I'll use that one. No, I'm not going to YOLO though. I'm only going to take a 3-lot, 4-lot, maybe a 5-lot. Let's get it open.
Okay. All right, I got me a fistful of NQ.
Wow.
Make sure I get the right account.
I was going to say, it shouldn't be any different. I mean, what's different between eating and drinking?
Yeah,
online.
Same thing.
And I'm always drinking my coffee. There.
I'm going to be so mad if I get the wrong account.
I'm trying to make myself feel better. Day traders, Platform X. Let's get that open.
Just loading NQ on the chart, get your blood pumping.
What am I at? I'm up 108. Okay, I got a little bit of room to play with. A 5-lot is $10 a point.
Yeah, what am I looking for? I'm looking for the one that says YOLO, baby.
Here's the problem. You see, it hides the account.
Thinking,
So I need it.
I don't know if I want to go 92. What if I go 90? I'm going to be so mad if I miss it by like 2 ticks. Okay. All right, we're set. YOLO, YOLO.
What time are you planning? For the 2 o'clock or for the 2:30?
I don't know.
I don't know which one's more volatile. They're both pretty volatile. I think usually the bigger move is at 2:30 in my experience.
Chat 2 o'clock, right?
Well, 2 o'clock is when they pump out the decision and you get that instant move. Are you going to take a trade before it?
Where's Joker? Go message Joker. Where's he at? Where's Woodchip?
No, no kidding. You can't use daytraders.com. Wow, that's too bad.
For what?
Ruan, South Africa, can't use daytraders.com.
Really?
Mm-hmm.
I don't understand that still. Like, why does it matter? Why you can use one company and not the other? Let's see what I'll do.
Yeah,
Is
that is kind of odd, eh?
put this over here. Okay.
Guys, I'm working on setting up my screen just a little bit.
Yeah, all the news is at 2. Conference is at 2:30. So I guess 2.
Yeah. Okay. You're gonna be taking it. You're gonna wait for 2 and then go in, or you're gonna get in like at 1:59.
159. 159.50.
Can I make a suggestion?
What?
There's huge spread at that time. You probably want to get in around 1:55 then.
Sometimes you get a pre-bounce.
Yeah, you do. I know. That's a chance. Almost. Yeah. Yes. Total net. What is this net? Yeah, that's a little bit of a problem.
I don't know.
Yeah, I'll let you figure it out.
Like I said, sometimes I do it, sometimes it works, sometimes it don't. Sure could use some improvement.
While you're doing it, I'll call out the spreads.
I'm just hoping I got the right accounts. You're over here talking about what am I doing, this and that. I'm like, I don't know. I'm just hoping I got the right accounts. What was that disclaimer? Do not follow trades.
Yeah, do not follow our trades.
This is it for the week, right? What does that mean? For the news? Yeah, I think FOMC is it.
Nice move up.
What we got? We got 15 minutes. Ready to trade again. Take a look. I think that's it for the week. The FOMC 2 o'clock, 17. Tomorrow we got jobless claims at 8:30. And that's it for the week. There we go. Feds are live. Switch over to the Fed.
What's the link for that? What's the website?
The one
Gov.u or something?
I got it from YouTube. Got Bloomberg now, but I think I'm gonna switch. I've never had problems with Bloomberg, but probably should be.
Oh, you're not on the. Okay, well, I thought you were on the one that's fed.gov.u or something like that. Because I do know there is one that.
There we go.
There we go. Oh, it's going to double display. Okay, then we just remove it.
Now the question is, we taking bets? Going up, going down?
I think we did that already.
That says 230. All right, go back to the other one.
I don't know how to do this. We'll have to figure it out another time.
What you trying to do?
Trying to get my little account screen to display logically, even if I change screens. So
Going back to Bloomberg. Need a disclaimer. These opinions are not necessarily ours.
Ren, can you use Tradeify?
I don't know if people
Seriously?
like Bloomberg.
I don't know how you ban one and not the other.
Maybe they just haven't got the license yet. Different areas gotta get different licenses.
Yep. Or they don't bother. They don't care. That happens a lot here where I am because of the French. You need to operate in French. You need to provide French information. So a lot of firms just say to hell with it.
Well, it's a process, right? Start in one country and then you move more and more and more.
Wow.
I would think Apex would be bigger than Bulenox.
Yeah, you can use Bulenox, but not Apex. Anybody know which one started first? Was it Bulenox or Apex?
I don't know. There was quite a few out before Apex, but Apex kind of shot up with their loose rules. 20 accounts. Personally, I think Bulenox has probably always been better. They don't promote. They don't promote very well.
Ruan, it's funny you say that because I always had that feeling that Bulenox and Apex was the same. Same thing with Lilu. Either he just copied or they all just kind of copied themselves. They really all look the same. They have so much similarities. Some differences, but so many similarities. I say to myself, this is odd.
I wouldn't doubt it if they come out with several different ones.
Why not?
Why not?
Smartest idea, because you are your own competition. You keep the whole market for yourself.
Mm-hmm.
Okay, for the Brave, we're going to be taking a trade. Turn spread is a quarter 50. Quarter point, half point. I'll let you know where it goes to. I'm predicting numbers of 13 points to as much as 40 points spread. That's the thing. If you're going to use a market order, that's the slippage you're going to experience. If the spread is 40 and 10 seconds before you buy at the market and then sell at the market, you're going to lose 40 points. You're going to get filled at those spreads, which is wrong in my opinion, because there's other orders coming in also. And if you buy at the market and there's someone also selling at the market, they should match your orders. They shouldn't be able to take the sell order and fill it 40 points lower from trader A, and then trader B comes in at the same moment to buy at the market and they fill it 40 points higher. That just seems wrong.
Yeah, what can you do? I think some people set limits, like a stop limit. But then, like I do, that Your slippage can be insane. I think you got to be in before.
Two
Another
bottles
ding.
of Pep. Oh, I bought Pepsi today. 2 bottles of Pepsi, $7. Doesn't that seem like too much? $8 after tax, to be honest with you.
That stuff's getting crazy, isn't it?
Like 2 bottles of Pepsi, seriously? I'm an old guy. I still remember when it went over $1 a bottle, I was having a heart attack. Now it's $4 a bottle.
Talking about the 20 ounces or the 24 ounces?
The 2 liter. That's 8, 16, 24, 32, 64 ounce.
I told you I used to drink a lot of soda. And the job I had, I remember I think it was 24 ounce, went from like 99 cents to like $1.07 or $1.10 or something like that.
Mm.
I went back to work, told them I needed a raise. They're like, you're already one of the higher paid guys. What do you need a raise for? I'm like, man, my soda went from 99 cents to $1.10.
Let me show you.
I need a 10% raise or I can't work here.
Oh, I didn't trade.
In hindsight, that's not the best reason to ask for a trade, but
This raise, yeah.
I was young, vicious. Like, look, my soda costs 10% more. I need a 10% raise. Pay $1.22 for a 2 liter. Oh my goodness! Buy those and ship them to the U.S.
Yeah.
What's the shipping fee?
Fill up a container and then open up a kiosk on the corner.
I couldn't believe like what a 12-pack costs now. I don't drink soda that much anymore, so I might stop at the store and pick up like a 20 ounce.
No,
Normally they're on sale, so it's like 2 for $3 or something.
Coke is cheaper. That's insane. Here, all the sodas exact same price. They don't differentiate from any company. It could be A&W root beer, Fanta, C Plus orange drink, Pepsi, Coke, Dr. Pepper. All the 2 liter bottles are the exact same price. They just have one price for the 2 liter bottles.
They don't have their sales?
Well, yeah, no, I'm saying when there's a sale, yeah, but in general, all the bottles are priced the same. Even when there's a sale, though, actually, it's usually. All
right, as a disclaimer, sometimes
5 minutes before.
Sometimes this Bloomberg will play music. It may or may not get censored. Their opinions are their own. One time I was playing it and they was talking bad about Trump. Everybody was disliking the stream. I'm like, grow up, people.
Let's see if I can
Grow up. All right, 5 minutes. Be back in a minute. Be ready to press the button.
No, I don't see the link for the government website. I mean, it's probably easy to find, but sure. Basically, I can tell you when your account gets rebuilt, if you are, I don't even know. I don't know if you have to be in admin only state or even just $1 down. I think Omnius says even 49,999, they'll reset you. I don't know about that because I'm never in that state. I'm either above or the account's finished by the time it rebuilds. So I couldn't tell you. But anyways, with my accounts, the ones that are in admin only state, because they're blown, I have to keep messaging them to reset them. And they said it's not their fault. It's something to do with Rhythmic now. It doesn't get reset automatically. But I am noticing some of them do. I'd say about 30% are getting reset automatically because I have about 10 of them. So some of them do get reset automatically. Spread is now 50 cents. 50 cents a quarter with only 3 minutes to go.
What are you saying about reset?
Oh, Bulenox.
They reset mine?
You can read, just mail them. They help me in a few minutes. Yeah, that's what I do. I send them a thing and they help me out. They say, we reset it and just restart your platform. I never had a problem with them doing it. I just find it annoying to have to do it. That's all. Mm-hmm. Yeah, no, they reset about 30% of mine. I would say 30, 40% seems to be about that. I'd say 3 out of 4 or 2 out of 3 don't get reset. Somewhere in that area.
All right.
Okay, Brett, 3/4, half 3/4.
We got 2 minutes. I'm gonna see what Bloomberg has to say, and then focus on this trade.
Yeah, I'll take a look, Ruan. Let me just let's get the
unemployment. And going into this, I wonder if we're going to be surprised more.
Let's get this thing out of the way.
Changes, or by how much the S&P actually remains
minute and 40 seconds, half 3/4. Who knows? Maybe the rate cut is priced in already. I'm surprised we're not up to 2 points yet. Okay, 3/4 point.
You'd expect a big downgrade to growth. You'd also expect an upgrade to unemployment. We might not get that.
A minute and a half to go.
Especially given the fact that we're at a pretty neutral pace. Just taking a look at where we were, the projection was for 4.5% at the end of this year.
No, I'll do today.
Unemployment rate and a 3.1% core PCE. It wasn't expected to shift that
Give me
much
10
on
minutes.
either front over the following couple of years.
John, I think what you bring up is a really, really important point. What confidence do we have in
deciding who do I trade?
Next year, December.
I think I'm going to trade the top step. And I think I'm going to do a 5-lot.
Across America.
Oh, I'm getting a bounce. Whoa, a minute before.
Fixed costs.
Uh-oh.
This is the question, I think, for the committee.
How do I get in that?
And for the news conference, too, for Chairman
We're
Powell.
at 2 points. The spread is up at 2 points with 30 seconds to go.
And how he's thinking about it over at Jackson Hole in August. What is anchoring your view on the labor market right now?
30
seconds. How do you get in that? You put in a bid.
I don't know.
Or is it
I got filled.
Because the Chairman Powell
have to jump.
was very different to the Chairman Powell of August.
I have to jump, chat.
It was really important back in July.
They're gonna block it for 10 seconds though, After
15, I'm about to jump.
Right now, people really
Jump.
the idea that we have this
Is what it is, chat. I got 47.
200,000 jobs created.
You're long. I'm long at 41.
50,000 a month.
Only a 1 lot though.
We should be looking at.
Do you get lulled into a bigger conversation, a bigger decision?
There we go.
Would have made?
They're gonna close the chart.
What
I get?
Nice. I'm on the right
Froze.
side of it.
I don't know.
Oh yeah, they always froze it.
The question is not if.
Looks like I got 37 and 45.
How much? 25 or 50?
Hey, not bad. Up
How much can you
$346.
project in the guidance, the forecast, equities going into
That was it, chat.
unchanged on the S&P 500. In the bond market, 2s, 10s, 30s look like this. Your 2-year bond yield up by 3 basis points.
Wow.
Your Fed decision.
So we shot up to the previous day's low.
Did they go up or did they go down?
Up. You're still frozen? We're up.
No, I'm talking about the rate.
2 more cuts this year.
Down?
They cut the rate, right? They just said 2 more cuts.
There was 1 dissent. And that is from
I don't know about
Byron,
if
the
this.
Trump
They won't say anything
representative
about that. I
on
think
the
that's at
board who wanted no
2:30
cuts
the speech.
this time. He wanted rather
All right, let's
2 cuts this time, 50
switch
basis
over, show
points.
these trades. We're going to lose the FOMC for a minute. Double trades.
Where's
One
my
was-
phone? Where'd you put my phone?
I didn't have your phone. One was long, one was short. I don't even know which was which. This one says stopped. It must be the short one. Shot up. One went one way, one went the other.
How much fun it is to bother
Not
us.
sure, Bama. That was my YOLO trade for the day.
They also adjust the forward guidance.
I love it. You sound like me on the open.
That gives me one account at 57,760 and the other one at 45.
There is
What? 57? You only need 53. You guys went all the way up to 57?
I went 53,700. Is
Oh, I heard you say 57.
that what it said? No, 53,700. The other one's at 45,400.
Numbers than others, but the growth rate is marked up for this year to 1.6% from 1.4%, and the unemployment rate is unchanged at 4.5%. PCE inflation at 3% is unchanged from their July forecast, and core PCE inflation
gives me another account.
1%. There's no
Now let me get rid of these. Don't even want them.
Once again,
Don't even want them visible.
The new member of the board from the Trump administration.
So what's the, it says 3 cuts here. What does that mean, 3 cuts?
They might be saying 3 cuts this year.
Mike McKee, thank you, sir. Stay close. We'll take some time to internalize what we
All right, I got the NQ out of here.
A lot of information.
I think just putting that on the chart, my heart rate goes up.
1/10 of 1% in the bond market yields.
Feel your pulse on your neck.
Yeah. Should have had my heart rate meter.
Strength, some dollar weakness. We approach 119 on euro dollar, which is its own story, which we'll get to later. 118.84. I want to do a couple of things. Let's take the forecast and just focus on 2025 and 2026. And I just want to focus on where the projections were in June. And
so did they cut or not?
Just go through this piece by piece. For GDP,
holy shit! Look at that bar on gold.
June, that's an upgrade.
Is that the bar?
And for next year,
Bar on gold.
we've got
What's the ticker?
That's the, and that's the 5-minute chart.
for now. So we're looking for
GMC, right?
We've come down from 3.6 to
MGC.
3.4. And PCE has remained pretty stable, I've got to say, for this year. For next year,
wow.
we're looking at around 2.6%.
That's a bar.
Who was trading that one?
So just get into this a little bit more. What an odd decision we've got here, Bramo. That this Federal Reserve,
47 points,
has cut interest rates by 25 basis points, has increased by just one interest rate cut relative to.
All right, they cut by 25
this year. At the same time, they've upgraded.
What I don't understand is why are they saying that there's going to be 3 rate cuts this year? Isn't that supposed to be during the speech at 2:30 when they tell you what they think they're going to be doing?
No, they just put out the numbers. Then they're going to talk about the numbers at 2:30.
So then, why is the bond market?
They put out the whole report.
Yeah, the report's out.
Printed out. Yeah.
Projection that inflation will remain high and they will cut.
Yeah, so it's down 0.25.
And what this hints at, and this I think is really going to be interesting, is this clear desire by the Federal Reserve to overweight the economy, even allowing inflation to run hot, and they will keep cutting despite that inflation. That is what is getting translated into this market.
So she's saying they're going to keep cutting despite inflation. So for anybody that don't know, as interest rates go down, inflation goes up.
To see this, to see a rate cut.
So rate cuts are not necessarily a good thing.
How can you explain that?
Well, I think there's 2 possibilities.
That means the price of your soda is about to go up, sir.
And Paulson from the Philadelphia Fed, and most probably Stephen Myron. When you look at the
more money you have, the more inflation you get.
They moved up the bottom range and the top.
That's why the Fed didn't want to cut. Trump's been pressuring them.
Unemployment rate, it didn't move at all, but inflation.
Well, I thought he was pressuring them to cut.
Yeah, Trump wants them to cut. Powell didn't want to cut.
Unemployment and at least unchanged or lower inflation.
They don't listen. They do what they want.
Oh,
I don't believe the president has any influence over the.
No.
Wide dispersion in 2026.
If anything, the president's going to do what the Fed tells him to do.
On how many rate cuts they're going to want to see, except Mr. Myron thinks rates will go down.
I've said it before. Create a list of the presidents that made the Fed mad.
You're starting to think about questions already. What do you want to know from Chairman Powell?
Say no more. Say no more. Huh?
In your reaction, if inflation isn't going down, then why?
You don't even have to finish that sentence. We have a band bounce here. I don't know how to get up the Renko charts. Let's see.
Mike McKee with the latest.
We can get a Renko bounce here.
News conference. It starts in about 25 minutes time. So we got 25. The Federal Reserve ultimately met the market.
Am I on top chat again? Am I missing chat?
Is a little bit more interesting because this
Probably
market,
are.
Bramo, as you know, is much more aggressive on rate cuts for next year than this.
No, I got everything.
That's it. Band bounce failed.
Based on the median dot in the Federal Reserve's projection, because as Mike McKee just indicated, the dispersion, which is something you talked about.
Anybody else take the?
Is incredibly.
Is that FOMC too loud? Y'all let me know. Y'all want it lower, higher? Don't matter to me. Tell me what you want. Tell me what you want the volume.
Yeah, put it louder. I can still hear you talking. Really, pump it up.
Really pump that up.
A Fed funds rate that ends next year well above 3%. We are now below that in the future.
I'm going to try and still take a long. That's it. We can't go much lower.
Guess what? There's not a median statistic
3 points,
here
and I can't go long anymore. 2
Is
points.
sub 2%
1 point.
economic
Ooh,
growth
didn't stay there, didn't hold. And I can't go long anymore.
Bruin says maybe a bit louder.
The answer to that is no.
I had it louder. I turned it down a little bit. We'll go a little bit louder.
To your point, TK, which is why this administration would like this Federal Reserve to be a lot more aggressive than these dots would imply.
Which is the reason why the market is hearing exactly what you're pointing out, that is not an acceptable kind of reality. And that's why I think it'll be very interesting to see.
Now they're mad they didn't cut enough?
Really gets behind this.
Greg Peters, you're following the story as it evolves. What's your initial takeaway?
Yeah, so the initial takeaway is definitely prioritizing growth. I'm not surprised.
Prioritizing growth. We're at all-time highs.
I am surprised by only one
Kind of growth you want.
I think most people thought, myself included, you'd have 3. But I think the question that we're not asking is inflation itself. So is embedded in that forecast, is it still I'm sorry to say, transitory inflation component driven by tariffs that roll off over time?
Yeah, that means inflation could go crazy.
That is factoring in.
Especially if they do another one.
Forward thinking, then that does mean there's more room for cuts because they're not as worried about that inflation component. So
You got companies like Microsoft at almost a 40 PE, and they're cutting interest rates.
What's driving it underneath is the key.
To your point, there is a very clean, dare I say, convenient glide path back
Nvidia
down to
at a PE of 50, over 50.
For this year, 2.6 for next, 2.1 after that, down to 2 for core PCE.
Yeah, there's a big rebuttal on that, and that is in the dollar. And you mentioned this earlier. And the idea that long-term bonds yields are falling. You're seeing a rally across the board in everything but the dollar, which just hit the lowest levels.
Wow, gold is making new highs.
See, they're starting talking about the dollar going down. They're deflating the dollar.
On euro dollar.
That means inflation skyrockets.
And catch up with Bob Michael at JP Morgan in the heart of foreign exchange.
It's about time. Meat's been getting so cheap. All we're eating is steak every night. It's about time they raised prices. I'm being sarcastic.
Oh.
We certainly thought that
Like, you're freaking crazy.
A 4-pack of steak the other day at Costco was $75. I said, shit, it's soon going to be over $100 for 4 measly steaks at the store. Forget the restaurant.
I'm telling my wife to buy a hamburger. She's like, why don't we get steak instead? I'm like, why do we gotta get steak? She's like, the steak's cheaper than the hamburger. We're about the same price. Might as well buy the steaks.
Surprisingly restrictive.
Like, this is getting ridiculous.
Market revisions and thought, wow, we've got
Poor chickens.
more restrictive than we thought. Let's start getting to neutral and let's do it in unified fashion. I think this is good for
Yeah, ruin prices are insane on everything.
Let's talk about which ones. It might be good for risk assets.
I tried to go short. Shit, at 64, I could have had quick 20 points, 25 points.
Hell, it's almost cheaper to go to the restaurant and buy a hamburger than it is to make it.
And typically higher inflation is bad for long-term bonds.
I can go buy a half-pound hamburger for like $10. Comes with French fries. Comes with French fries, a drink, a soup.
Oh.
Perhaps every
I don't even think I could buy the ingredients to make that at home.
Maybe they don't get down to 3% right away.
So NQ's coming down.
3.5.
Gold's going higher.
Side of that. I get that. I'm sort of with.
Honestly, I would have figured they would have moved in the right direction.
Until we see the final shape of tariffs.
So now I'm gonna go write my $5,000 a day, right?
Some of it, and the consumer hasn't really
Do it.
back all that
I
much.
put it in big letters on
Signs of disinflation.
the thumbnail.
I'm not that concerned about it.
$5,000.
Bob, your colleague Michael Feroli made global headlines a long time ago talking about a sub 2% potential GDP.
We're not gonna mention the one that's down 4,500.
No, you don't have to.
These median growth estimates today, do we have to get used to this? Sub 2% real GDP?
That's how you do it, huh?
Just don't put the word net. Just put the number. You could selectively choose which account you want to
Well,
destroy.
technically, I'm still net up about $5,000. That account's gone. It don't count.
We're looking at dots now, but we also haven't weighed in. Forget about tariffs. The one big beautiful bill
You can't reference an account that's not there.
first quarter. So I wouldn't be surprised to see GDP estimates go up next year.
For those of you just tuning in, about 10 minutes ago, 11 minutes ago, the Federal Reserve made the decision to cut interest rates.
NASDAQ is sideways. How the hell are you saying NASDAQ is sideways?
50 basis point cut. That was the newly minted.
What's the sideways? We shot up, we came down like 100 points, up 100 points down. We're sideways. Okay, well, I guess it's open to interpretation, eh?
Trying to listen to what this guy's saying.
At the very bottom of the screen, and it's sub 3%, not for next year, but for this year. There is a dot there, just below 3% for 2025. Now, we were all asking, and of course, when
oh my God, I thought I saw spiders. My wife is giving me hearts.
But I think we've got a pretty good idea who this might have come from. We've been asking how
he's saying they want the interest rate
babe.
The descent is one story.
Below 3% by the end of the year. How could they even do that? FOMC's quarterly, right? Wouldn't this be? This be the third quarter. They ain't got but one more FOMC, right? Or big one. Maybe I'm wrong. I don't know.
And yet, how much is the market trading off this? And I wonder,
guess they're going to do another one next month.
Disproportionate weight in the market, because this is someone who really is coming with the backing of the president and could be some sort of signification of who he might pick next year.
I can see this picture out of the corner of my eye. So let's take this picture, and for our audience at home, I'm just going to articulate what we see on the screen right now.
No, I don't get it. You're making an argument that they're going to lower rates and it's going to increase inflation. But when we have high inflation, they lower rates.
In expectations from
to slow down inflation.
No, that's not true. You're wrong.
No idea.
Yeah.
26 brings.
They raise rates.
27 brings. This is a low conviction.
No.
When you're wrong with inflation, the right.
Guys are not gods.
This guy. This is guys. This is the same guy that told me you're eating a cookie.
I have no idea what that is the thing.
And that was just me and him.
How much they can pass along inflation, how much there will be this elasticity in terms of.
Somebody's a bad influence on you, sir.
The good news is I'm not spitting food at the mic.
Do you predict that we will see these economies?
Whoa, we're dumping. But according to someone that I'm listening to, we're going sideways. Wow, some people are off on like Planet.
Who said we're going sideways?
Planet Lunatic. I don't even want to say his name. I don't want to embarrass him.
I don't think so. I think that's a.
Damn sure wasn't me.
The world has changed
No.
COVID. I think the environment of zero interest
Why
rates,
is it falling?
interest rates will continue to be looked back on as a bad.
Everybody's
that drove
setting everything up to readjust to what they're doing.
Yeah, well, I guess everyone expected the rate cut. They just didn't expect 3 rate cuts being announced in September. I mean, like you said, you got October, November, December. That means out of the next 3 months, there's going to be at least 2 rate cuts.
I wouldn't be surprised if we get drop.
Can get to 4%.
Remember, we're looking for the. I gotta turn this down. It's too loud in my ear.
Spice trading sideways.
Much lower though.
Let me turn that. I'll let it play for y'all. If y'all want to mute it, let me know.
That's a different question. So
you know what I'm smelling?
What?
Go. I'm smelling a dump, and then when he talks, it's gonna rocket higher.
I'm talking about the longer term. I think over the next. So this is mid-September. So we got October, 3.5 months to go for the year. So we generally get a Santa Claus rally, right? So we're expecting December to rally. So in order for December to rally, what do we got to do? We got to drop. So we could drop 2400s, 23, mid 23s, even down to low 23s. And then come December, push back up. The cutting the interest rate is kind of a double-edged sword because it allows companies to borrow money cheaper, which floods money into the market. And that's going to help out a lot of companies. You got companies like let's see,
Coca-Cola, Pepsi.
You want to look at Meta? Meta's really a bad example. Let's go to Broadcom. Let's go over here and look at the finance. Go to annual cash flow. So they have almost $60 billion in debt. You can't see it's below the number you see there. It's not the right number. So it's almost $60 billion in debt. So if we drop the interest rate by 1 point, and they refinance that debt, that's a lot of money. And then that money goes right back into the stock or the shareholders, where they can buy back shares.
We know based on the data so far.
So just for that one company, that's a lot of money.
Right.
What we don't know.
Pick another one. What about
in the next several months?
What about Netflix? So if we go once again, finance, balance sheet, they've only got $8 billion, but that's still a lot of money. To Adobe.
And that's why you see
$6 billion.
coming down and yields coming
Starbucks.
I think what we've seen, Tom, without a doubt.
Starbucks got $22 billion. So even if you cut that by 1%, that's a lot of money.
But Lisa, I think it's key to point out, not all members of this Federal Reserve. There's some members of this Fed will still be anchoring their labour market view around what's happening with unemployment, which has been pretty stable through all of this, through the whole of this summer. And look at the forecast.
But at the same time, when you flood money into the market, you're also increasing inflation.
Yeah, which is the dispersion. And going back to that is the reason why I'm struggling to interpret the move in markets.
Like we'll use the pizza example. So if you have a pizza and it has 6 slices, and you get one, you get one of those 6 slices. But now if they take it and they cut the 6 slices into 12 slices and you only get one, you still got one piece of pizza, but you only got half of what you would have got before.
Does the bond market behave if it believes that a Fed is willing to really
would do such a thing?
prioritize growth in a significant
The
way?
more money they print, the more money they put into the market, and the more inflation goes crazy.
Of KPMG, she's standing by. Dan, welcome to the program. So much to process here going into this news conference in about 12 minutes' time. What's your number one issue going into the presser?
Also, if you look at dropping the interest rate to help out companies, we go back, we look at, say, Microsoft again, which is one of the best companies in the world. Top 10 companies make up like 40% of the S&P. So a company like Microsoft is a huge portion of the U.S. and I guess a lot of other countries too. So when they're trading at a 38 PE, they lower the interest rates. It gives them more money to buy, send up their stock price up. Now you're buying Microsoft up here at a 50 PE.
A reduction in what they thought the neutral rate was. Powell had referred to that there had been some discussion.
And if you understand PE ratio and what your expected returns are over the next 10 years,
and I think that's important.
It's not really where people want to buy. They want to buy down here.
It's not just calibrating down because the neutral.
So when Microsoft shoots up, we have to have that correction.
Removing some restriction, acknowledging the weakness in the labor market, want to shore up the labor market. But if you really do read this sort of through to next year with a major change in leadership at the Fed, you could have a situation where you overstimulate and get in more pernicious.
Also pulling Bitcoin. Let's take a look at Bitcoin.
Prophecy on the fact that consumers and firms now expect inflation to be higher, and I think what the Fed is struggling.
I don't know that any of them, Bitcoin, gold, futures, I don't know that any of them are really going a direction. I think they're just there's new information in the market.
That's something that has got to have startled the Fed.
They have to readjust to the new information.
Confusing economic time. It's also a very confusing time when it comes to the Fed's reaction function. Do you have a clear sense of how the Fed is going to prioritize?
Think of it like you're going on a trip and you have the GPS set, and all of a sudden in your path there's an accident or something, the roads are blocked, and the GPS has to re-navigate. Now you're changing your whole direction.
Mild bout of stagflation that they did since March that's gotten more stagflationary over time.
I'm up 300 on day traders so far.
I think the 25-point cut was already priced in, but the news that we're going to get maybe 2 more by the end of the year.
You have to shore up the labor market a bit. That said, you don't want to remove.
Generally, when we see cuts like that,
you allow these
we're in a market crash.
We heard earlier, I mean, the idea that
that's not, you generally don't see that at all-time highs.
It's not just one and done, and Powell was careful in his Jackson Hole remarks on that too.
I'm cutting my size.
It's not all at once.
Also keep in mind that when we do have a market crash,
that we're going to normalize
the way they fix it is by cutting rates. So if there's no rates to cut,
quite cognizant.
In a market crash, you get a bigger crash.
Michigan, Chicago,
There's no way to
and
correct
down
it.
south down the Mississippi River. The mail I get is people are flat on their back in this K-shaped economy. How does Jerome Powell address the have-nots of America? They don't have AI. They didn't buy NVIDIA like John 3 years ago. What do we do with the people that aren't
Trade really good when I
participating in
eat.
the system?
Oh, yeah?
Apparently.
It's really the inequality is getting worse. We know that. Actually, Moody's just came out with an update.
We got 220. We
This
should
is
have Powell at
beautiful.
230.
The top
Yeah, 40 points of range on the 1-minute candles. You see, this is my wheelhouse. This is where anytime you click the button, as long as you do it properly at the right time, you make money. And what I mean by the right time is when I get a setup. I don't chase.
Pretty much flatlining.
I just stay disciplined, which I was. I've been incredibly disciplined through this whole thing, eh? You guys don't see it because I'm trading on my daytraders.com chart.
The heart of what we're still dealing with is the embers of the pandemic inflation. We're still smoldering.
But yeah, I've been really disciplined here.
Increases in prices, and that's what's
Good job,
really
good job.
tough for the Fed to deal with, and for the average American. Because remember, even when the labor market was much more robust, when inflation flared, the majority of Americans believe.
I don't know. I ain't got no more buttons left to push unless I want to try to pass another account.
Was eroding, and
Well, that might end bad.
And I think that's very important because it really gets to the corrosive nature of inflation. And at the end of the
Dealer
day,
draws 57,
you
Ruan
cannot
draws
get full
31.
employment
Wah, wah.
sustained unless
Okay,
you
we're
inflation. What we
looking to
don't
take a
know
long here.
is if this will just be a
Not
couple
the greatest of
steps up
trades. I
and
won't
then
call it
just
an
come
A+
off,
trade.
or if it will be more
Bearish momentum is above
persistent,
bullish
and that's what
momentum
people
currently.
have
We're
to
below
emphasize
VWAP. We're
at
below
the
previous
press
day's
conference
low.
today, is that they're gonna
But
be mindful to watch what's
the
coming
current
on
ultra
in
short-term
terms of
trend
how
right now is
persistent
up
the inflation
for the
becomes
last
and
1,
how
2, 3,
much
4, 5, last 8
inflation
minutes.
expectations, to get jargon,
I'm a
is
short-term
get
trader.
NVIDIA, that's my biggest position, TK, at Hindsight Capital.
You killed it.
I wish.
You just killed it.
Dan Swank of KPMG. Dan, thank you. Appreciate it. Matt Lazzetti of Deutsche Bank standing by. Matt, welcome to the program. What an interesting forecast.
It was a nice
mix.
trade. Another
More rate
64
cuts in our
bucks,
future.
364.
Growth apparently okay.
I went long.
Unemployment not a problem. Explain that one, Matt.
3 lot 664. I got 10 points on that in a few seconds. I hope they don't penalize me for less than 15-second trades.
And so this is all about risk management. It's not about.
You had a great trade. We're going to punish you.
Yeah. What are you going to do in this kind of volatility? You got 10 points. Really? I'm going to count to 10 and sit there?
Stuff like that drives me crazy.
Get out your stopwatch. You hit your target, but get out your stopwatch. You should do that in the Olympics too, eh? You won the race, but you got to take 1,000 steps. You only did it in 890. So go back, do another 110 steps.
Is how much does he lean into the near-term signal of cutting at each meeting this year?
Do you get a sense, Matt, of how much the reaction function has shifted? John's done a really great job of talking about how from July to August.
I can always tell them I don't know how to count to 10. That's why I only take out 7. That's why my take profit is 7 points.
That's what I would do.
I can't count to 10. I stop at 7.
I would do it.
I lost 3 of my fingers in a lawnmower accident.
Actually, that's not even what I would do. You know what I would do? I would just say it was 10 seconds. What are you talking about? I counted. Listen, I counted to 10.
They lowered their unemployment rate forecast, and yet we see a lower Fed funds rate.
There's a problem with your rhythmic,
Now projecting at 5
or with
plus
your
years
Tradovate,
of inflation being at least
or your
50
whatever it is, wherever
Wait.
you're getting your data from.
You want me to take a video of my stopwatch next time?
So I think it's a Fed where, as long as there are no worries about
This
the
is
labor
where I
market,
get
they'll be
hurt.
hyper-focused on
Taking a
inflation.
sell right
But
here
once some of those
when
concerns
the
about
short,
the
ultra
labor market
short-term
really
momentum
manifest,
is to the
you see a
upside.
pretty dovish shift, and I think that's
But
what we
not
saw
doing
with
it.
Chair Powell
I'm going to try and get
adjusting
in on a
forward.
long
We're seeing it
again.
manifested now through the dot
Mike, you know I dispute everything.
Yeah, you do.
As well. We're all focused on tariffs and substitution. Are we seeing a decline in purchasing power here? Is there an income effect from tariffs that the Fed
Hey,
has
good boy,
folded?
Sparky.
And what is this, John? 50 more beeps they're going to do by the end of the year?
Potentially, yeah. Widespread of
by the next
estimates, though,
time the Pops
TK.
win one of them.
I'm doing something that's ultra not recommended. I'm teaching my cat to come up on my desk.
I thought you was going to say you were teaching your cat how to trade. We need big buttons for the cat. Let the cat choose a trade.
And the cat can't count to 10 either.
points earlier that there's great dispersion around that data.
Yeah, we're gonna have to put 2 cat toys on the floor. One's long, one's short.
At the same time, GDP
Chat.
growth is tracking above 3%.
I'm gonna regret it. He's gonna walk across my keyboard one day.
All right, I gotta re-up my drink before this other guy comes and talks.
So I think it's a Fed where
Be back in a second.
if you are seeing it eat into disposable income growth, consumer spending growth in the aggregate is strong, and monetary policy has one blunt tool, which is the Fed funds rate. So really, they're not apt or really able to get at.
Well, we know
a lot
you
of
can
those
go
distributional
15.
issues. I think Chair Powell and the Fed would probably tell you that is more up to fiscal policy, tax and spending policies that we would see from the administration. So I don't think that this is really about trying to alleviate some of those distributional concerns. I think it's
Whoa,
concerns
someone's
about the
phone
aggregate
dropped.
market, which is not being manifested in strong growth at this point in time, and them just trying to get ahead of it and taking out some insurance against that.
Matt Lazzatti, appreciate it. One of the best, Matt.
Oh,
Thank you,
yeah.
sir. Matt Lazzatti there of Deutsche Bank. The news conference a few minutes away. We often hear people come on the program
forgot
and
about
say
that.
they expect it to be dovish, and really the response to that should always be dovish to what? Relevant to what? Relative to who and what and where? Relative to the market, this isn't dovish. Of course, we were looking for really bullish expectations for rate cuts in the next 12 months or so, but it's their own forecasts that make this dovish. The fact that the Federal Reserve is coming out and telling you, you know what, Lisa, next year, I expect a better picture for growth. I expect a slightly higher inflation print than we did a few months ago. But you know what? I give you some rate cuts to the mix as well. That's basically what the Federal Reserve has communicated in these forecasts today.
Yeah, and the currency markets are hearing that loud
Wow,
and
it's
clear.
a
And
big
I think
move
that
up.
is the
You
biggest
really-
tell, and I keep going back to that with the Bloomberg Dollar Spot Index now at a new post-2022 low. We have seen it completely weaken, fall versus some of its counterparts. Why? Because of this prioritization of growth over inflation by the FOMC and a reiteration of that in this SEP.
After Sparks, you don't want to take a nap?
For a few years. When you read sell-side literature right now, economic think tank literature, can you trust the forecasts?
Well, yes. I mean, I think forecasts are always fraught. The dot plot is no different than a sell-side forecast. It's not like they come with any additional information. But I think in this particular period, when there's so much going on, and I hate the word uncertainty, but it is the right word. I mean, we've been talking about tariffs as an example. We have a Supreme Court decision coming. We don't know what the shape of tariffs is going to look like after that, just as one example. So it's a really difficult environment. So you should expect to see more dispersion. What the markets are trying to suss out, what I'm trying to suss out is what's real and what's political.
I don't know what I'm going to open up.
And I think that's an open question, and
I'm
time will
going to
tell on
open
that
up.
front.
Is the political real?
Well, the
Aren't they
political
ultimately
is driving the real.
They're going to be the same thing next year, aren't they?
Yeah.
We got Powell getting ready to speak in a minute.
I think this is the world.
What time do you have to
This is
leave?
the,
Me?
investment that we
Sometime
have to
between now and
so
3.
It's not going to change anytime.
I think the wife's getting the kids from school today, but she does want to take me out to a movie. I think we got to leave as soon as she gets here.
But we don't know for sure who's that dot.
I got to be
Who that dot actually
dressed and
belongs
ready
to.
and out the door, I think, at 3.
You can have a decent guess. Sure. They're not going to tell us, but here's my point.
I bet you $10.
Is it an anime movie?
I think.
I know some
to
people
say,
were
that's
Anime?
Governor Myron,
going to go
it
see
does
an
not matter.
anime or something like that.
Isn't that
No.
a hint, a flavour?
I think it's a horror movie.
Further down the line.
Oh, okay.
In 2026, isn't that
Either a horror movie or a horror movie. I
what the
don't know.
Fed
One or the
share
other.
look like in the next 12
I
months?
figure they'll both work.
Where is my
trade
trade copier? Oh, it's down here.
I need to learn how all of this works with economics. Anyone have any suggestions or videos or channels?
Finding out as quick as I can, the markets will police the politicians in Washington.
The whole movie? I think we're watching the whole movie. You said there was a horror movie out. One of those ghost movies or something. Conjuring or something? I don't know.
I agree with that. This decision is the easy decision. Without a doubt, we're on the same page on that front.
Just like you want to watch a kid's movie or take the kids, or you want to just watch an adult movie? I'm like, we can watch a kid movie. She looks it up, so nope, we're going to watch this horror movie.
The chairman of the Federal Reserve, Jay Powell.
Like, yeah, that's what I meant to say.
Let's
Sure.
take a listen.
All right, there he is. Let's listen in. What's this guy got to say?
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
2:30.
While the unemployment rate remains low, it has edged up. Job gains have
Let's wait a
slowed,
few
and
minutes. I'm going to take a
downside
5-minute
risks
break.
of
I'll be
employment
back.
have risen.
All right.
At the same time, inflation has risen recently and remains
I don't want to
somewhat
trade during
elevated.
these.
In support of our goals and in light of the shift in the balance of risks, Today, the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy.
Whoa, we're both gone? Where did he run to?
The evolving outlook and the balance of risks.
It's my break.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the Fed funds rate based on what each participant judges to be the most likely scenario for the economy.
I guess I can trade.
The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, just as a quick follow-up, I'm sorry. You and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible and that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply. And to the point
My God, I'm talking to you all this time.
Called a curious
My mic is off.
You know, typically when we say things are in balance.
Oh, I'm trying to change. No, it's not. I'm just full screen trying to figure out how to change the symbol on stupid wealth charts.
Now demand coming down a little more sharply because we now see the unemployment rate edging up.
He's talking about unemployment going up and inflation going up at the same time. That's not good.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. But what we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition.
Wow, what a bunch of idiots.
I think if you go back to April and now look at the
turn that back down.
Creation numbers.
Don't got much longer, so.
And August, it can kind of, I can no longer say that. So what that means
Anybody
is
still
that
listening to that guy?
Why
do I got this?
Tilted toward inflation.
Okay.
I would say they're moving toward,
So if y'all want to go over what he's talking about,
quite out of quality. We don't need to know that.
yeah, it's basically saying that
We know that they've moved meaningfully
the
toward
employment rate's going down.
between the two.
It doesn't necessarily mean unemployment's going up,
Moving in the direction of neutral.
but it means we have less people in the market.
Under what circumstances
At the same time, we're having inflation go up.
points rate cut be warranted?
So that's like
And how
a
seriously was that
double-edged bad thing.
meeting this week?
So for those that don't know, when unemployment rate goes up or employment rate goes down by a few percentage, it's generally a sign of a recession. So
And you tend to do those at a time
could be hearing the first signs of a
policy is out of place and needs to move
slowing
quickly
economy and
to
a
a new place.
recession.
That's not at all
And if you add
what
inflation
I'm
on top of
I
that,
feel like our policy has been
basically means nobody has jobs and they can't afford anything.
to wait and see how tariffs.
Now, does that mean that we'd have a recession tomorrow? No.
I think we're now reacting to, to the
But
much lower
with
total
people
job creation and other
talking
areas
about
of softening
2026
in the labor
possible,
market and saying, well, those
could see
risks
something possibly in
maybe not
2026.
fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Doesn't mean we have to. It's just
the New York Times. Should we be
first
viewing
signs of negative
the committee
growth.
taking out some insurance against the possibility that the labor market is at risk of weakening, or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because
tell you, I was
if you look at
talking
the
about,
SEP, actually,
these guys
the
making
projections for growth this year and next actually ticked up just a little bit, and inflation. and
their
unemployment didn't really
platforms,
move
like
much.
when
So
they're on
what's different
tequila.
now? What's different now is
Yeah.
you
This
see
one's got to
a
be
very
the
different
worst.
picture of the risk.
I'm
Uh-oh.
in the trade. I'm in the
We've
trading
seen-
tab, and there's
we
nothing
were
to
looking
put
at
up
150,000
trading
jobs a
buttons.
month
I
at
have
the
no
time of
trading
the last
buttons
meeting.
now
And now we see the revisions and we see the new numbers.
because I couldn't find where to
I
change my
don't wanna put
template.
too much emphasis on payroll job
And there's
creation,
it's
but
not
Talking about the
automatic.
platform or the website?
suggest that
Yeah,
the
I
labor
know,
market
wealth
is really
chart on the
cooling off.
platform.
And that tells you that it's time to take
I was
into
on the
account
September
our-
contract.
our
It took me
policy.
forever to figure out.
SEP, once again, the median participant has inflation higher than previously expected by the end of next year.
How to put up-
and the Fed not
how to
getting back
change the
2%
symbol.
target until 2028. So I guess I'm just wondering how you
You don't just
characterize
click on the
risk price
symbol
pressures
because that's
of
too
kicking
intelligent
off
and
a series
instinctive.
of cuts at this point.
So you had to go
Yeah, so
deep within
I
some
would
menu,
say
and now I don't
we,
have trading buttons because
we
my chart
fully
closed.
understand and appreciate
And if
So
you go
the-
into
we need
the
to
dashboard
remain
and you
fully
go under
committed
the
to
trading
restore
section,
full-
there's
2%
broker
inflation,
portfolio, option analysis,
sustainable,
option chain,
sustainable
time and sales,
At the same time,
stats,
we've got a
option
waiver
order
list
entry,
to the
trading
goals.
competition,
Since-
simulator, trading copier,
since April,
wealth
to
tracker,
me,
and DOM. But there isn't
the
just simple
risks
trade
of higher and
buttons.
more persistent inflation have probably become a little less. And
Seriously.
partly because the
Lady's
labor
asking
market
him
is softened,
why we're
GDP
expecting
growth is slow.
inflation, and yet he's dropping the interest rate.
So I would just say that
Just
the
telling him
risks
that seems
are
kind of
less,
reckless.
than one might think.
So it sounds like they're
and
trying to
in
get
terms of the labor
in front of
market, what
a
we're seeing is
possible recession.
Unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
My camera's gonna go
Michael
again.
McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment.
And again, they're talking about
Most of
cutting
what's
rates, and
happening
again, the
in
bond's not
employment
going
area
up.
Is related to immigration, which your rate cuts wouldn't address. How do you see
There we
that
go.
as more important?
3
than
years later,
inflation, which has remained
I'm back in business.
almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in due to immigration. You clearly have a slowing in demand.
I don't think this is
which
the greatest
now
trade
perhaps more
copier
than that
for
in supply, and we know that because the unemployment rate has ticked up.
for a fast market.
So,
Because everything
so
is
that's
on a 1 second delay. It's click, click, click. You see it on the chart. Even when you change size.
And this year,
I changed size.
What chart are you talking about?
Your target 2 years
Wealth
later.
charts.
2% does not seem to be in sight. Does that suggest that the
Like I change contract size. I click on the plus sign. If I click on the plus, 3 goes to 4. Plus 5. Like, really? You need that much time to think. When I click on the plus, I do it on Ninja Trader. It's instant. As soon as I press, you don't even see it.
How you put the projections together. You're writing down a rate.
On wealth charts, press it,
designed to
react. Press
the
it,
course of the S&P
react. That's a way to keep you in a trade for 15 seconds, right?
and maximum employment.
If we make everything change really slowly.
No one really knows where the economy will be in 3 years, but the nature of the exercise.
You find I complain a lot?
Write down policy.
Listening to this guy.
My daughter says I do. All you do is complain. I'm not going anywhere with you.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the effect, basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume.
And not only nobody got any money, it says that goods are fixing to go up quite a bit because of tariffs.
We will do that job. Right now, the situation where
I guess your soda's going to cost $2 now.
We see inflation. We continue to expect it to move up. Maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have 2 mandates and we try to balance them. For a long time, our framework says that when our 2 goals are in tension, and this is quite an unusual situation, how do we decide what to do? Because our tools can't do 2 things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's.
We're looking at 53.47.
More neutral, which presumably.
I don't think it's the fact that people can't find jobs. It's the fact that so many jobs out there ain't paying no money.
We're sort of more at the margin, so kids coming out of college and
y'all got minimum wage in
minorities are
Canada.
Having a hard time finding jobs. The overall job finding rate is very, very
Like a lot of states, it's still like $7 an hour or something.
So very low. So you've got a low firing, low hiring environment, and the concern is
I think Florida's like 15.
If you start to see layoffs, the people who are laid off there won't be a lot of hiring going on, so that could very quickly flow into.
I think Georgia's like $7 an hour. Who the hell could live on that?
Healthier labor market, there would be jobs for those people. But now the hiring.
You have to work 100 hours a week.
So that's been a growing concern
just to
over
pay
the
rent.
last few months, and it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Well, you don't need to eat.
Yeah, I definitely don't need to eat.
That's a luxury.
The luxury.
In the past, during rate cuts, you used the word recalibration, and I wonder if you pointedly did not use it this time. And in fact, when you say
Guess we all gonna start camping outside of our jobs. Don't need cars.
The opposite of recalibration. Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be.
That was a nice wick over there.
Word about the SEP really here. So we often point this out.
Let's see if we can
But the
continue to
S&P
the upside.
It's an
All right,
accumulation.
I'm going to cut that. I got to leave here shortly. Chit chat with you for a minute. How's life going over there?
Quiet. Angry with the wealth charts.
Uh-oh.
They're very, very slow to react.
Thought you liked the wealth charts.
Great copier, but they're very slow to react. You can't use them in fast markets. They're just too slow to react. It seems like when you press the button, it's 2 seconds. Where's my trade copier?
Okay, I got a few minutes. I don't know if you're going to cut out when I do or hang out. Oh, any cares or concerns for a few minutes? I'm up like 5,000 a day if we don't include the count I blew. Got to be like the other streamers, right?
Yeah.
How to make $5,000 in one day. YOLO, baby.
That is so funny.
I just hope I got all those charts deleted.
You want to see how crazy it works? Let me see if I could set it up here. Display count. I think it's over here. Okay, so there you have my my PA, right? You see the button here? Can you see it? Hold on. Oh, no, it's not showing. It's not on the mouse. No, it's not properly set up. It's properly set up for the other chart. Whatever one it is. The daytrader.com. It's the dimensions, you know, the screen capture. It's not the same. I can't show you. But anyways, here, I'll click it. 1, 2, 3, 4, 5, 7, 10.
What do you
click? So the 1, 2, I clicked the plus sign. I was at a 5 lot. I clicked the plus sign. I went 1, 2, 3, 4, 5, 7, 10. So it displayed 7 and it displayed 10. But that's the time delay. Click, 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 click.
Yeah.
7, 10.
Maybe that's how they get it to result copy.
Instead of going 6, 7, 8, 9, 10 on each click, I click, 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 click. 5 goes to 7, 10. It's too much of a delay. It's stupid. Anyways, bring it back down. I certainly don't want to trade a 10 lot. Yeah, but the thing is, you don't know if it registered the click or not.
I'm looking at my one of my charts. It was like this perfect entry signal. I got in right there. Of course, I got in on accident, right? I was scared to jump in the way that thing was jumping around. You seen it? We had it jumping back and forth about 20, 30 points there. I was like, well, I'm just going to have to jump, I guess. Jump in.
Jump in! Sparky, bug off.
It was actually crazy how both my orders were around the same price. While the candles jumping up and down like this. That was just sheer luck. I don't think it would have mattered, but...
Daily P&L 61.
All right, that's going to do it for me.
Yeah, I think I'll close up also. I muted you.
Huh?
No, I'm reading your message there. I muted you.
Shit, that was like 30 minutes ago.
Was it? Okay. You're right. 2:37, 2:55, 20 minutes ago. Okay, guys, that was fun. I'll see you tomorrow morning, 9:15 or earlier.
Hard to be playing that guy talking and I'm talking and you're talking and
yeah.
We'll have to work on it.
Market. Yep.
Yeah, and the fast market and everything else
going
on.
Fast market. Yeah, it's okay. We had a good time.
Work in progress.
Sounds good.
Guys, appreciate everyone hanging out. See everyone. You streaming tonight?
Nah. I'm gonna try and work on a video.
Tomorrow then. Say bye tomorrow morning. Hope everybody has a great rest of their day. Say bye tomorrow morning.
Take care, guys. Bye.
Later, guys.
The trading day is done. The charts have had their say. Bulls and bears have battled. Now we call it a day. With NASDAQ's lessons learned and future still in sight, we'll be back tomorrow chasing profits right. Stream's ending soon, but we'll meet again. Markets never sleep. This is not the end. Own your future now. Let the charts reveal. With NASDAQ's rhythm, the grind is real. Some wins, some losses, that's the trader's way. We learn, adapt, and come back to play. Tomorrow brings new moves, new chances to sway. So rest up now, we'll be back to trade. Stream's ending soon, but we'll meet again. Markets never sleep. This is not the end. Own your future now. Let the charts reveal. With NASDAQ's rhythm, the grind is real. So close the books, take a breath, unwind. The market's rhythm will always shine. Own your future now, let the charts reveal. With NASDAQ's rhythm, the grind is real. Stream's ending soon, but we'll meet again. Markets never sleep. This is not the end. Own your future now. Let the charts reveal. With NASDAQ's rhythm, the grind is real. Some wins, some losses. That's the trader's way. We learn.